as envisioned by Zen business.
Okay, so ready to dive in.
Absolutely. Let's do it.
Today we're going to be really digging into some predictions about where the U.S. economy might be headed.
Sounds good.
Specifically, we're focusing on real estate and inflation, two pretty biggies.
Yeah, for sure.
And we're going to be looking at a report from Wall Street Actuarian that goes over a bunch of statements that Janet Yellen, the U.S. Treasury Secretary, made recently.
Okay.
And I got to say, some of her predictions are, well, they're pretty optimistic. Let's just say that.
Yeah, I mean, some of them really contrast with what we're seeing play out in the economy right now.
Exactly. Like, for starters, she's predicting a rebound of the U.S. real estate market.
Interesting.
And get this, she thinks it's going to happen, like, really soon. In the coming weeks, she said.
Wow, that's a bold statement considering the current state of the market.
Yeah, I mean, coming weeks. That's pretty wild.
So what do you think? What's she basing that on? What kind of signs is she seeing?
Yeah, that's the big question, right?
Mm-hmm. Right.
I mean, I guess it's possible she's looking at things like, how mortgage rates have dropped a little recently.
Yeah, that's true.
And some lenders have started to ease up on their requirements a bit. So, maybe that'll get more people interested in buying.
Yeah, you're right. I mean, when it comes down to it, it's all about supply and demand. If more people suddenly want to buy and that demand spikes, well, that could shift things pretty quickly, maybe even in a few weeks.
Right. So let's say her prediction is right. What could that mean for our listeners, like someone tuning in right now?
Well, if you already own a home, this could mean that your property value could see a nice increase in the very near future.
Okay, not bad.
But for those looking to buy, well, get ready for some competition. Of course, all this hinges on whether Yellen's prediction actually pans out.
Yeah, of course. All right, well, moving on from houses, let's talk about inflation.
Okay.
So Yellen also said she thinks inflation is going to drop back down to the Federal Reserve's target of 2%, and pretty quickly, too.
Quickly, huh? That's another one of those words that makes you wonder.
Exactly right. And she even acknowledged the term Biden inflation, which I thought was pretty interesting.
Yeah, for sure. I mean, just by using that term, it kind of feels like she's she's admitting that people are worried about prices going up and that they think maybe the administration's policies are part of the problem.
Yeah, exactly.
But putting the political stuff aside for a second, I mean, how realistic is it to expect inflation to fall back to 2% that quickly?
Right. Good question.
I mean, right now, inflation's still way above that target. And even though things have eased up a bit, there's still a lot of, global factors pushing prices up,
Yeah, like what?
Well, like all the supply chain issues we've been dealing with. And, the war in Europe isn't helping either.
Right. And speaking of trying to lower inflation, Yellen mentioned three things she thinks will help bring it down. Relaxing regulations, getting more energy from U.S. sources, and extending those tax cuts from back in 2017.
Yeah, those are definitely some interesting ideas. I mean, each one of them could potentially play a role in lowering inflation, but there are also a lot of little details to think about.
Oh, for sure. Like what?
Well, like with relaxing regulations,
Yeah.
that could definitely help boost economic activity, but it could also backfire in some unexpected ways.
Oh, interesting. Like how?
Well, remember back in the early 2000s when they deregulated the financial sector? Well, some people say that contributed to the housing crisis.
Oh, right.
So, deregulation can be a bit of a gamble.
Yeah, makes sense. What about increasing U.S. energy production?
Well, that could definitely help lower energy prices, but you also have to consider the environmental impact.
Right, of course.
And then there's extending the tax cuts, which, that could encourage people to spend more, but it could also mean a bigger budget deficit.
Yeah, that's a good point. So it's definitely not as simple as like just flipping a switch and suddenly inflation's gone.
Exactly. It's a
Yeah.
lot more complicated than that. Everything's connected.
Right. And speaking of things being connected, Yellen also said something pretty interesting about tariffs. She said the tariffs are going to bring in a ton of money for the U.S., like substantial revenue, over the next decade.
Okay. Now, this is where things get really tricky. See, tariffs are basically taxes on things we import from other countries. And yeah, they can generate revenue for the government. That's true.
Right.
But they also impact how much things cost for, regular people like you and me. Everyday stuff could get more expensive.
Oh, right.
And then you have to think about how tariffs affect businesses here in the U.S., especially those that rely on importing materials from other countries. It could make them less competitive.
I see.
And then there's the risk of, well, trade wars. Other countries could retaliate and put their own tariffs on our exports. It can get messy.
Yeah, tariffs have always seemed kind of tricky to me.
Yeah.
Like at first glance, they seem like a pretty easy way to make more money for the government. But as you're saying, there can be a lot of unintended consequences. Have there been like any examples of tariffs working or not working in the past?
Oh, yeah. There are tons of examples throughout history. Some worked, some didn't.
Like what?
Well, for example, back in 1930, they passed something called the Smoot-Hawley Tariff Act. It basically raised tariffs on like thousands of imported goods.
Wow.
And a lot of people say that actually made the Great Depression even worse.
Oh, wow.
But then on the other hand, you can have tariffs that are more targeted, focus on specific industries or situations where maybe there's some unfair trading going on. And those can be effective sometimes. I
Right.
think the main takeaway is that you really have to think about the potential costs and benefits before you go slapping tariffs on everything.
Yeah, that makes sense. So for our listeners who are, trying to figure out what's going to happen next with the economy, what should they be paying attention to over the next few weeks and months? Like, what are the big signs to look out for?
Well, first of all, keep an eye on interest rates. See if they're going up or down. That usually tells you what the Federal Reserve's doing to try to control inflation.
Okay, interest rates, got it.
Also, pay attention to whether businesses are hiring or laying off workers. That can give you a good sense of how the economy is doing overall.
Right.
And watch for signs of consumer confidence. Are people feeling good about the economy and spending money, or are they holding back?
Makes sense.
All of those things are really important signals to help you understand where the economy might be headed.
It's amazing, though, how all these different parts of the economy, they all kind of fit together like a giant puzzle.
Exactly. And the pieces can move around in unexpected ways sometimes.
Yeah, for sure.
So as you're watching all these economic trends play out, it's important to think critically about what you're seeing. Don't just take things at face value. Question assumptions and try to see things from different perspectives. The more informed you are, the better prepared you'll be to deal with whatever the economy throws your way.
That's some great advice. Well, we've covered a lot today, haven't we? We've gone over Yellen's predictions about real estate bouncing back, inflation going down, and all the ins and outs of tariffs.
We sure have. It's a lot to think about.
It is. But it's important to remember that, predictions aren't guarantees. The future is always uncertain, and you never know what might happen.
Yeah, that's the truth. Things can change in a heartbeat.
Exactly. So I guess the key takeaway is stay informed, think for yourself, and be ready to adapt no matter what happens with the economy.
Couldn't have said it better.